The McDonald's Corporation stock has performed very well over the last year. It's up nearly 20%, while the market is down over 20% from its all-time high. That's mainly because the company has been able to increase their prices and their profit in the last quarters. So this seems like a great time to take a look at the company and try to come up with a fair value by calculating an internal rate of return based on the free cash flow of the company. Currently, McDonald's is trading at a PE ratio of 30 and a forward PE of 23. The dividend yield is 2.2%. If we take a look at the last 8 years, we can see that revenue per share remained flat, but earnings and free cash flow per share grew, so they have been able to increase their margin. In fact, free cash flow grew 9% annually over the past 10 years. Earnings grew 5.6% and revenue went down 1.5% annually over the past 10 years. Now that we have an understanding of the company's growth rates, let's get into valuation. Most of the years, the number of shares outstanding has been steadily decreasing. That's something I like to see. When we include analyst estimates until 2024, we can see that McDonald's is expected to grow its revenue with 2.8% annually. This means they will grow in line with inflation, maybe even a little bit below inflation for the next years. Which brings us to our normal case scenario for valuation. In this case, cash flow will grow in line with revenue, because the company already improved their margin over the past years, while revenue remained flat. I let them grow at 6% in 2025 and 2026, because we will probably still have a little bit higher inflation in those years, and I do believe that the company will be able to increase their prices with inflation. In the following years, I will bring down the growth rate down to 4%. They can increase their prices every year, they can open new shops, but they already have a lot of restaurants, and they can get new customers, but they already have a lot of customers. The fair free cash flow yield of 5% already seems a little bit optimistic, but it is a famous company and maybe deserves a bit of a premium. But we can see the internal rate of return is only 5.4%, which isn't a market-beating return. In the best case scenario, I believe McDonald's will be able to grow at 9% every year. And then I decrease the growth rate over time, as our predictions get more and more uncertain. This seems very optimistic to me, as there aren't any big changes made in the business model and their revenue remained flat over the past 10 years. But even in this very optimistic case, we would just get an internal rate of return of 9.7%. The worst case scenario looks really bad, with an internal rate of return of only 3%. And keep in mind that I still kept them growing above revenue every year. This brings us to our combined result, which gives us a potential internal rate of return of 5.9% at the current price. This is no financial advice, and you have to do your own research and make your own decisions, but I personally won't buy shares of McDonald's at the current valuation. Even at $205 a share, the stock wouldn't be interesting to me. I personally don't like the risk and reward of the stock. In the best case, I probably would grow in line with the market. And in the normal and worst case, I would probably underperform the market. What is your opinion of the stock? Do you already own it, or do you plan to buy it? If you want to see a stock that I actually like, I recently made an analysis of Amazon, so feel free to watch that video and don't forget to subscribe if you want to see regular stock analysis videos.